Hey YouTube, how is it going? Last week I showed you a GameStop trade on how to trade an ironfly successfully. And guess what? It's up $1,000 this week, and that's what I'm going to show you today. Hey, how's it going? In this video, I'm going to show you a trade idea on a high volatile stock like GameStop and give you a new perspective into trading the ironfly strategy. Normally we do this on a low volatile stock like Disney or indexes like SPY, but it is rarely done on a high volatile stock like GameStop. This week GameStop has been pretty much going sideways, and there was not a large move compared to how it did throughout the year, where it went from 3 to 300. So definitely it had a fair share of wild swings, but right now it has stabilized a bit and hasn't been moving much. So I'm going to show you an ironfly trade, which I also presented in a previous video from a week before, and compare both of them and kind of show you how the IV has affected this particular spread. From the last time I discussed, this trade is already up $1,000 in just 5 days. I'm going to show this to you from Tastyworks. Let's pull up GameStop. We're looking at April 16 expiration, and right now the implied volatility is 213. And the ironfly we have been discussing on the week before was the 175 ironfly. So we would sell this triangle for 175, and then we will buy some protection further out. And in that trade, I suggested buying the 100 put and 250 call as the protection. And right now, this particular trade is worth 41.50, and a week before it was almost 55. So this trade has already been up like $1,200 in just 5 days. And from what I remember, the IV was almost 280% from last week. This clearly shows you how big of an advantage you have when you sell options on a high IV stock, but it doesn't move as much. If you do the same thing on Disney, you would probably collect like $500 credit. And if the stock even makes a slightly big move, that trade will be a loser. But when you collect almost 50-60% of the width of the spread, and a week before when I presented, we were collecting almost 70% of the trade, we were only risking like 2,000 to make a profit of 5,000. It basically includes all the big moves that the stock can make. Okay, so you have already priced in a large move, which means when the stock does not do that, you can easily walk out with an easy $1,000 winner out of this trade. And I wish I put it on. I had a small account and I didn't want to make a big trade, but it looks like I could have walked out. My opinion did work out correct, and maybe I might have walked out. So next time or another stock when I think it's within my range and the IV is high enough, and you can make sure to put it on. So right now, would you sell this for 41? Would you put on a new trade? Maybe not. The IV has already come down to 200. So it may go down, but right now it's not having the same risk reward as the week before. So definitely take this as an idea, and maybe you could find something for the same situation. So it is nice to do this on Disney also, because yeah, it is a sideways stock, it is a low volatile stock, but you are already anyway collecting 7 times more credit for trading this on a high volatile stock. So it's just a new perspective to think about. And if you have a small account, or if you're willing to take more risk or do some fun trades, have some adventure, absolutely, I think, yeah, you can put on something like this, and make sure you put on a closing order right away, because you cannot watch this every day, every minute. So as soon as you open something, you put on a closing order for maybe a $500 winner or $1,000 winner based on the width of the strikes, what stock you are trading, and then you probably have a good chance as the IV keeps coming down. Okay, so that's all I wanted to share. Just a quick video giving you an update on what happened to the GameStop trade. Do check out my other ironfly video comparing different strategies. And thanks for watching. Let me know what you think in the comments, and I'll catch you in the next one. Thank you.